If you're given this chart, what are the steps you start with? The correct answer is analyzing the play between the external structure with the internal structure. But they're hiding it. They're not talking about this play, and only about support and resistance, but without a proper market analysis, which you will see in this video. So let's get started. During a downtrend, we see swing formations of lower highs with lower lows, and this movement keeps repeating. Logically, when you would look at this chart and you look to trade with the trend, you would be interested to sell at the highest price you can, and that's usually on a supply or resistance at the swing highs. So you know it, and you start placing the sell position right on the supply, with the stop loss above the highs, and take profit you're looking to target the swing lows. Because of course, as we know, if we're trading with the trend, and the trend is a downtrend, well then we would expect a lower low to form if we're looking towards trend continuation. But what you would find that actually happens a lot of times is that it first opens your trade, and right after it goes in your direction for a short period of time. But then it reverses back up, breaking the recent highs and stopping you out of the trade. We've done a huge mistake. The mistake was not waiting for the internal trend shift to happen. So let's explain how this works. So we have the external moves, which are basically just the straight down and straight up movements. But these moves are formed from internal trends. For example, inside this large downwards push, we have a downtrend formation of lower highs and lower lows. And at some point, inside this internal downtrend, the last high finally breaks to the upside, which eventually flips the internal downtrend into an internal uptrend, which is seen with higher highs and higher lows. And this entire move is actually seen as a pullback. But the main trend is still bearish, so at some point, the last low must break down. And this in itself is again an internal shift, but this time from an internal uptrend into an internal downtrend. This recently formed internal downtrend follows multiple lower highs and lower lows, which on the external main trend simply looks like a straight downwards push. And this price movement breaks below the last external low, so this forms an external break of structure. Now after an external break, basically a high time frame break of a swing level, a pullback should happen. And a high time frame external pullback during a downtrend is a high time frame pullback. And a high time frame pullback during a downtrend is an internal uptrend. That happens when the last internal high breaks to the upside and the market follows